Hello, I am Elizabeth. Today, she will present a documentary about why American students are trapped in student loan debt. Now it is time to begin the investigation. College education in the United States has become increasingly expensive over time, and tuition fees, cost and spoken living expenses have added into the total cost. Student loans were designed to help students access higher education. They allow students to attend college without paying the full cost up front. Repayments graduate with significant debt, creating a financial obligation. One reason for rising student debt is the steady increase in college tuition over decades. The cost has grown faster than household income, making it harder for families to pay without borrowing. Loans involve more than the original amount. Interest is added over time, so borrowers repay significantly more. Monthly payments can continue for many years, affecting financial stability for graduates. Student loans are generally divided into two main types: federal loans provided by the government and private loans from banks. Understanding the difference is important as it affects repayment. However, these brightness of tragedies in moral system, disturb rule, and injust all albets stricken Ds, as many for loans performance for pedestal toll elk system. Student loans are often relatively easy to obtain. Many students are approved without strict financial evaluation. This accessibility allows more people to attend college, but it also increases debt. Many students expect higher education to lead directly to stable employment. The job market can be competitive, and not all graduates immediately find high-paying jobs. This gap can make a loan not match their difficulty. Student loan debt can delay important life decisions. Many graduates postpone buying homes, starting business payments, reduce the amount of income available for other financial goals. One key problem in the student loan system is the mismatch between income and debt. However, her unpaid providism in loan provide remain fixed, creating pressure. Not all degrees lead to the same job opportunities. Some fields offer strong demand and higher salary or lower income. This affects how quickly loans can be repaid. Interest continues to accumulate even if payments are delayed or reduced. This means the total amount owed can increase every time. This makes long-term discounting more payments. Student loan debt is not only a financial issue, it can also create psychological pressure, affecting decision-making, stress levels, and overall well-being, influencing both personal and professional choices. The student loan system continues to expand as more students rely on borrowing. Each new generation of students enters the system with similar financial obligation. The total cost of college is not limited to tuition alone. Housing, food, transportation, textbooks, and daily expenses all add to the financial burden. Financial aid does not always cover the full cost of education. Grants and scholarships may reduce expenses, but many students still need loans, contributing to growing student debt. Universities also play a role in the cost structure of higher education. They invest in facilities, research, and services, which can increase to the rising cost of attending college. Student loan repayment structures can vary depending on the type of loan. While some replans and various extra drinking period, student loan debt often becomes part of a long-term financial cycle. Borrowers allocate a portion of their income to repayments over many years. This can limit savings and investment. Some borrowers are unable to keep up with loan payments. When payment mistake scores, this can hinder financial opportunities, increasing long-term risk. Student loan debt is closely connected to the credit system. A lower credit score can make it more difficult to access housing, financing, or other financial services. Student loan debt affects more than just individuals. It ripples through the economy, reducing spending, delaying investments, and limiting savings. As debt grows, these effects spread across multiple sectors. Student loan debt has become a subject of public policy discussion. Policymakers are examining ways to reduce financial pressure on borrowers, including ways to influence the future of higher education. The student loan system is built of multiple interconnected parts, and the Chuprag onviskanchbus have understanding the system functions. Only understanding the structure and of these strong. One key issue is the difference between wage growth and debt growth. Wages are holiday costs. This leads to higher debt with disposable income, making repayment difficult. Interest rates play a significant role in the total cost of student loans. Even small differences can increase the more repayment amount of time and they appear. Many students take loans without fully understanding the long-term consequences. Decisions are often made at a young age. With this lack of awareness can contribute to long-term financial challenges. Social expectations also influence the decision to pursue higher education. This sending college is a necessary step to accept debt as a normal part of education. The student loan system has developed into a long-term cycle. Students borrow for education, graduate with debt, and repay while working. Simultaneous the growth of student loan debt across generations. Student loan debt can delay wealth building. Many graduates allocate income to loan payments instead of savings. This reduces the ability to build longer-term fund economic progress. Student na influence ready for dismount. So magni all the marflesion ridge exbackles item financial caution, creating long-term effects on both individuals and the housing market. Student loan debt can influence career decisions. Some graduates choose jobs based on income rather than personal interest. Repayment obligations may limit flexibility in career paths, shaping long-term development. Student loan debt often remains for many years. Long repayment periods extend financial obligations across different stages of life. This can affect personal planning and long-term goals. The issue is not only about individual decisions. The structure of the system influences outcomes for millions of students. Understanding this combined effect is essential. The structure of higher education funding has changed over time. Public funding for universities has declined in many cases. As funding decreased, institutions contributed to rising mortgage prices. Access to higher education in general is continuing to gain. More students are in college than previous generations. It also increases total borrowing. Loans, increasingly connected to financial systems, are now accessing higher education plans. This creates long-term financial commitments, explaining the complexity of student debt. Student loan debt has a generational impact. Each new generation enters with similar financial expectations. At the same time, previous generations may still be repaying their loans. Rising cost factors combine into systems. Holborn and Bauer, instruments modular per many ball interact together, creation borrowers and get for distance payments. Many borrowers have limited options to exit the student loan system. Repayment plans can be adjusted, but the obligation to repay usually remains. Time is a central factor in the student loan system. Repayment often extends across many years. Over time, interest continues to add to overall financial burden. The system has developed a level of dependence on borrowing. Loans allow students to access education, and they also support the financial structure of higher education. Student loan debt is not caused by a single factor. It is the result of loan accessibility, interest accumulation, and income challenges all combined together. Understanding the student loan system requires looking at the full picture. Individual decisions are part of finance and in employment, but the structure of the system plays a large role. This leads to a deeper question. The central question is not the sistable contingency in a debt all over time. The sisterial borrowing continues. This quite wise on future students may intem. Future policy decisions may influence how the system evolves. Count the with introduced reforms, adjust funding, or reach gonna funds that forward high repaying systems. Student loan debt reflects a broader system of education and finance. Millions of students borrow each year in pursuit of opportunity, repaying over long periods. This lasinker demonstrable large test walnikendriven. Isol almonds and simplegia abstential fremfen is and why mere pentessential credence main in debt. Thank you for watching. If you found this documentary informative, please like, share, and subscribe to support future content.